ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today.
All right. If it's echoing, it's you. It's on you. You either have multiple windows open or you have YouTube open at the same time as something else. So we have definitively worked out that if Brandon's not on and you're hearing an echo, it's you. It ain't me. So yeah, if you're hearing an echo, you probably have two windows open. You probably have YouTube open and something else. So yeah, I don't know what to tell you. So YouTube is nice and easy. That's what I would be doing. That's what I'll be using. Let's see. So what are we going to talk about today? Hello. Well, good morning. Good morning. Yes. Good morning to you, sir. Yeah. Surprise. Jobs were revised down for the year prior to March 2025. So going back from this March backwards, revised down 911,000 jobs. That was the job market that Jerome Powell said for almost 18 months now was strong and resilient. We see no evidence anywhere. There's just no evidence anywhere of a bad labor market. Everything's great. Everything's amazing. Look how good it is. Strong and resilient. And you're listening to this guy talk, you can't even find a job. So, yeah, he was off. They were all off. And it wasn't, the thing is, these empty suits, we will call them, the dumbest people in the dumbest room, they're not so stupid that they don't look outside the few 3 data sets that they, curate. They know what's going on. They canvass, they do surveys, they know. It's just, since it doesn't agree with their hypothesis, their inflation hypothesis, and their basic bias that we're always right, and lowering rates is an admission that we're wrong. Lowering rates is an admission that lowering rates doesn't do anything. Because if lowering rates did something, you wouldn't keep lowering rates forever. So it's just mismanagement all the way around. They continue to do this. They revised down. Yeah, and that was the year before that. This is just a constant trend of over-reporting, and they can say, well, it's not our fault. It's not. Yeah, but if you use faulty numbers that you know are faulty, and those are the numbers you use for your data dependency, then your data dependency is flawed. Your decision-making is flawed. So along with all of your monetary tools, also flawed. So it's just a joke at this point. You wonder why anyone listens to anything that the Fed says or any of these bankers, Jamie Dimon, any of these assholes. They're all idiots. And, at least with Jamie Dimon, he's a crook. He's not an idiot. He's a crook. He's out to steal your shit. Like, steal it. He's like Do Kwon. He's not like CZ. He won't pull a fast one. He'll steal your shit. Jamie Dimon is a thief. He is a corrupt, morally corrupt and otherwise thief. In the same way that Do Kwon is a thief. Yeah. Justin Sun, he's just crooked, but he's not a thief. CZ Binance, crooked, but not a thief. Bankman-Fried, thief. Big thief. Bankman-Fried's dad, thief. Mom, complicit. Might as well call it what it is. She's a thief. They're all thieves. They'll steal your shit while you're not looking. Alex Mashinsky, who, by the way, turns himself in to prison Friday at 2 p.m. And he's going to a camp, obviously. But thief. Just straight thief. So, I'll take the kind of crooked dude over the thief if I have to have a choice. If I have to have someone hang out at the house, at least they're not going to take stuff when I'm not looking. Silverware goes missing. I'm like, it's not even real silver. It doesn't matter. They steal everything. Crooks do crooked things for their own benefit. Thieves steal from everybody all the time. All right. So let's look at these jobs numbers that were stolen back, that were so good in the first place. Strong and resilient, said Jerome. The labor market crafted far fewer jobs than previously thought, according to Labor Department report Tuesday that added to concerns both about the healthy economy and the state of data collection. Annual revisions to non-farm payrolls data for the year prior to March 2025 showed a drop of 911,000 from the initial estimates, according to a preliminary report from the Bureau of Labor Statistics. The total revision was on the high end of Wall Street expectations, which ranged from a low of around 600,000 to as many as 1 million. So Wall Street expectations are already that they're going to be from 600,000 to 1 million off. So if that's the case, why does Wall Street give a shit what the Federal Reserve has to say? Like, these same people react, and then the same information, they react to it again, and then the same information, they react to it again. It's like, what's wrong with you people? They're like the worst version of Pavlov's dog. Anyway, the revisions were more than 50% higher than last year's adjustment, and the largest on record going back to 2002. Well, that's a good new record that we've set. The worst adjustment since 2002. Good job, everyone. You guys nailed it. On a monthly basis, they suggest average job growth of 76,000 people less than initially reported. 76,000. You guys have jobs. No, we don't. Yes, you do. I have it in my chart. Yeah, I know you have it in your chart, but your chart's wrong. I don't have a job. I can't pay for shit. I'm out here at the Wendy's giving hand jobs for hamburgers. And that ain't no good way to earn hamburgers. You can only eat so many of those kind of hamburgers. So anyway, the numbers, which are adjusted from data in the quarterly consensus and reflected upon information on business openings and closings, add to evidence that the employment picture in the U.S. is weaker than expected. Hashtag no shit. The BLS preliminary benchmark revisions to non-farm payrolls show a much weaker labor market over 2020, most of 2024 and 2025. Remember, 2024, what were they doing? Oh, they were late to cutting. Remember, cutting doesn't do anything, but they believe it does. So by their own rules and math, they missed July, like we did this year. Again, repeating the same amazing plans, amazing ability for the Fed to adapt to the economy. You almost go, well, listen, if every year you guys F up between July and September, why don't you put a meeting in August instead of Jackson Hole? Why don't you actually have a real meeting where something could be done, you idiots? But anyway, so poor economy last year. Going to July, didn't cut. Should have. Again, assuming cuts work, which they don't, but they believe they do. So they didn't cut. They paused. The market shit the bed, which it had been. The jobs market. Apparently worse than everyone thought. Then you go to September. Panic, 50 basis point cut. Then 2 more cuts before the end of the year. Then they pause. The job market is strong and resilient. In parentheses, I hate Donald Trump. That's what this really was. Let's call it what it is. The majority of the Federal Reserve members, the ones that aren't committing banking fraud, the ones that aren't, like the 2 guys that left last year under suspicious circumstances when they basically got caught stealing and acting on inside information. Those 2 guys left. They didn't say much. Jerome Powell said, I'm gonna have an investigation into this. I'm gonna investigate myself, he said. I wonder how that investigation went. It's weird. I never heard anything else about that. All I heard was they're spending $2.4 billion fucking dollars on a cafeteria and some marble floors in their shitty old building that employs way too many PhD level idiots. Then, so back. They do their rate cuts. Rate cuts are amazing, right? Rate cuts are definitely a tool. They're an incredible weapon. Well, how come 100 basis points of rate cuts in the last 5 months of the year in 2024 didn't do anything? Matter of fact, the economy's in worse shape now. You'd almost say it's being mismanaged. It's crazy. So then, fast forward, we get to July. Same thing. Same bad numbers. Same bad everything. Labor market is solid. What are you guys looking at? Like at a certain point, you got to wonder what they're fucking looking at. When they wake up or whenever they wake up, I don't know. It might not be the morning. Maybe they wake up at the crack of noon. They wake up. Someone hands them those papers. Here, look at your papers, Mr. Powell. Here, let me get your bifocals. Look at these papers and look at the data. What does the data tell you? What are you plumbing from the depths of this incredible data? Labor market is solid, strong, and resilient. And that's what I'm going to say. That's what I'm going to say at this meeting on Wednesday. And then 2 days later, by the way, the job market is in the tank. The last 3 months, probably 0. June, probably get revised to 0, which it did eventually get revised. So, again, they flopped in July. These powerful rate cuts that are supposed to be so amazing did nothing for a year. So what are we going to do now? Well, more rate cuts, which is fine. Doesn't make a difference. Maybe there's some psychology behind it, but I think people are wising up. So then you go a couple weeks later. By the way, last year there was 911,000 less jobs than the bullshit lies that we told you when we were telling you that the labor market was strong and resilient. All of this was, I hate Donald Trump. I'm Jerome Powell. I want my legacy. You're going to see my legacy, which is a little silly because Jerome Powell is only in office because he was appointed by Donald Trump in Trump's first, term. So you kind of wonder, like, what happened to Gentleman Jerome? I wonder what all happened to him. I feel like there's a story in a golf changing room somewhere where he got beat up and mistreated. He's just mad ever since then. Idiot. Anyway, benchmark revisions to the non-farm payroll show an obviously much weaker labor market over most of 2024 and early 2025, at the same time as the Federal Reserve was claiming that the labor market was strong and resilient. This is an economist, though. We don't really care what he has to say. But importantly, the slower job creation implies income growth was also on a softer footing, even prior to the recent rise in policy uncertainty and economic slowdown we've seen since this spring. In policy uncertainty, that's tariffs. And actually, the only thing that's been happening is the uncertainty has become more certain. The uncertainty is more certain? No, that would be increased uncertainty. The market is less uncertain. It is more certain. There is more concreteness in our understanding that the labor market is a dumpster fire, and it has been a dumpster fire for 2.5 years. And really, the whole thing has been a sham since the pandemic. You can't turn off the whole fucking economy for 9 months and somehow the economy's booming afterwards. You don't think any of that government intervention had anything to do with it? No. It's an amazing economy. It's a kick-started economy. What about all that lost growth? You can't get GDP back. Like what's gone in the past is gone. You can't go back in time. Oh, well, everything's going to go back to normal. How? People, half the jobs don't exist. How's it going to go back to normal? People aren't going to be getting these little weird checks they were getting forever. I mean, we're not there yet. Universal basic income. We're not there yet. So I just don't understand. I never understood that. It never made any sense. People are like, oh man, this economy is awesome. Some guy, I was at a coffee shop with some guy. He's a jackass. He's like a sales guy, fucking idiot. And I told him he was an idiot on several occasions. But I try to be nice about it. But he was like, yeah, man, this economy is amazing. And I was like, what? I'm paraphrasing because I don't remember the exact verbiage. But I basically told him, are you fucking stupid? And his response was, well, just look at everything. Look at everything. This was right after COVID. Like, we're still wearing masks in some parts of California. No, it's awesome. I was like, you don't think this is a little weird? The government does a bunch of stimulus. People get all these these checks. They start punting money into the market. You think that's healthy? Oh, dude, it's going straight up. I'm like, what job? What kind of? And this is when he told me he's a salesman. I'm an international software salesman. I said, what? I'm an international software salesman. So what does that even fucking mean? International? Everybody's international. Everybody's phone calls overseas. I don't even think we get charged for long distance anymore. International salesman. What do you sell? Software. Well, like what? It was some junk software for like insurance companies to use in the back end or something. I'm like, I'm looking at an unemployed man that doesn't even know he's unemployed. Guess what happened? His name was Brad. That's right. Freaking Brad. Yeah. Salesman, now unemployed Brad, who could no longer live in Los Angeles because it got too expensive for Brad. Fucking idiot. If he would have listened, man, it doesn't matter. There's a lot of Brads out there. Maybe that'll be our new, you know how there's like Chads, there's crypto Chads. We should just have economics Brads. I apologize to anybody in here that might be named Brad, but I've never seen the name Brad come up in the chat. So I think we're okay with Brad. So from now on, it's a Brad. When someone is a jackass, clueless, low IQ, dummy, they are a Brad. Tammy, do you have a Brad as a boss? There's a lot of Brads out there, man. Don't get caught up in no Brad. Yeah. It's not political. It's all just it's just bad data. We just blame the data. Don't be a Brad. Don't be a Brad. This is good. Look at what we're doing. Okay, let me get through this because the real funny stuff is the next Brad we got to talk about, which is Michael Saylor, who maybe their business may be bankrupt. He's fine personally, but there's a good argument to be made that Strategy, the company, is bankrupt. Like bankrupt. It's interesting. Anyway, it was a cool opinion piece I saw, so I think we should look at it. All right. Tuesday's revisions are not by themselves a reflection of current conditions. Those are currently being revised down. However, a recent month's data has also been pointing to a soft labor market. The months of June, July, and August saw average payroll growth of 29,000 per month. Below the break-even level for keeping the unemployment rate steady. Well, we know that because there's 7.2 million people searching for jobs, and there's only 7.12 million job availability. And when you look at JOLTS, you have to be careful too, because a lot of times there's like job openings are multiple posted. For instance, you're a company, you want to hire an executive assistant or whatever. You might post that job in 14 places, and you might change the verbiage. You might advertise it different in the different locations. Guess what? Mostly, if you advertise it at all differently, If it's not the same copy and paste ad, then it counts as multiple jobs. But guess what? There's only one job. There's only one executive assistant position to be filled. You posted it in 18 places with 13 different. So you can get really bad. You can get really skewed job availability numbers when there really aren't that many jobs available. So I think AI will help crack down on a lot of this. I mean, at some point you would think all of this would be instantaneous, clean data. I don't know why it's so hard to collect this data. I think that's probably something you need to look at. But anyway, 29,000 per month is bad. It's below. Think about that. Think how big the world is. Think how big the United States is. Think how big LA is. I was looking last night on GPT. LA has 12.8 in LA in the greater metropolitan area. 12.8 million people. 12.8 million people in LA. Say it again. 12.8 million. In the US, payroll growth in non-farms is 29,000 a month. It's 12.8 million people just in Los Angeles. And in the whole fucking country, there's only 29,000 new jobs in non-farm. Is that not staggering? That should be fucking alarming to anyone who thinks that the economy is good, right? Remember, economy is not the stock market. Separate, it's a different animal. So I think a lot of people need to really think about the underpinnings of their financial philosophies. I think that's what needs to happen. There needs to be a come to Jesus. I guarantee you there's somebody this morning, some Brad, that was shocked by these numbers. Downward revisions of 911,000. What? How can anybody be shocked by this? I'm shocked by the people that are shocked by this. I'm shocked that the stock market even reacted to this. Like, how do they not already know this? It should be common sense. The largest markdowns came in leisure and hospitality. There's a surprise, right? I don't have a job. If I don't have a job, I can't go do no leisure. I can't tip no hospitality workers. Common sense, bro. So the largest markdowns came leisure and hospitality at negative 176,000. Professional and business services, there's that executive secretary I was talking about, negative 158,000 jobs. Retail trade, negative 126,000 jobs. Let's see. Most sectors did see revisions downward. However, transportation and warehousing and utilities had small gains. Almost all of the revisions were confined to the private sector. Government jobs were adjusted down by 31,000. So, I mean, it's pretty weird, right? And then so people are like, oh, Donald Trump shouldn't have fired the BLS person. If you see numbers like this, don't you feel inclined to fire everyone and just start over? Like when the numbers are this bad, this consistently, and it's like they behave and they mandate and they dictate and they talk. They're very loud. They espouse. They talk down at all of us. I mean, they talk down at us. Look at Jerome Powell. Every single motherfucker can't even pronounce words on the teleprompter correctly. Well, he's probably reading a prepared statement. He's outlived his usefulness. But these dudes are so fucking arrogant, so prideful. They just look down on everyone. You can tell, just listen to the way that he answers questions. I have to answer another question to a simpleton. It's like explaining particle physics to a caveman. And you know what? These guys are so arrogant that right now, when they see this, they accept no responsibility. None. It's not like they were wrong. They were like, oh, this data. Like you couldn't see all the other 140,000 data points. I only look at two things. I look at myself in the mirror and I look at the Phillips curve. I don't have time for I just don't. I don't deal with insignificant data points like, payroll numbers and jolts and inflation, actual inflation or deflation numbers, or like surveys like Michigan or Ohio or any of the giant, or you know what? I don't even look at surveys from other Fed members. I don't even read the beige book and look at all the companies that are saying that they're on the verge of like layoffs and things like this. They're having a hard time. No. For me, it's this mirror and a glory hole at a local truck stop that I go to, and the Phillips curve. And that's all I need for the economy. Now, next question. Strong and resilient. That's all I got to say. So, in addition to these economic concerns, the revisions also bring added heat to the BLS, which has been under fire from the White House for its data collection methods and results. Yeah, no wonder. Of course they should be fired. All those dudes should be fired. The old system. It's an old clunky-ass system. August payroll count was lower than July's and also featured revisions that took down the June total to a loss of 13,000 jobs. That's right. June was negative. It's the first negative month since December of 2020. Think about that for a second. Negative. Yeah. 926 years. Why do they still have jobs? Yeah. Well, I'll tell you one more. Does anybody here have a job where if you were that wrong, you would still have a job, or would they have fired you? Like at a certain point, you are so grossly incompetent and negligent that it's dangerous. Right? Like there's certain jobs you can have negligent, incompetent people. Food service is one. They're all over the place in food service. And as long as they're not the ones preparing your food, it's a full industry of incompetence. But it's not the kind of incompetence that's dangerous. And even that kind of incompetence, like if you were as bad at math as these guys are, where could you find a job other than maybe a junior high school cafeteria? Not making food, just serving it. Nowhere. You have to be fired. Yeah, there's more stuff, but it's all mostly negative. Yeah, okay. I'm not gonna keep beating that animal over the head. Okay. Let's switch gears for a second. Okay, wait. What are your thoughts on yesterday's large-scale supply chain attack affecting the entire? Okay. First, I'm not sure how much you read about that article. It seems like you may have just grabbed a headline. Why don't you explain to me what a supply chain attack is? Go read the article about it. There was a bunch of sketchy. There's 3 or 4 contracts where JavaScript they put in this malicious code that would basically jump in between transactions. Like when you create a transaction to send, between then and when you sign it, it would swap the address out of a new address that may or may not have looked similar to yours, or you just weren't paying attention and you send your money to somebody else. And a bunch of people had warned, don't send any transactions for a few days. But this was a single article. I didn't see a bunch of articles about this. I saw a single article. You're not in any danger on an exchange. Some people have been scammed, and this is a legitimate thing. Yes. But did we really need the whole supply chain, all that kind of stuff? Come on. Don't big it up. Just ask the question. Don't big it up. But I only saw that warning from a few people. And even today, when you look in the news, like if you go down the news, Pepe rally, how to turn crypto news into a trade signal with Grok, physical IDs in New Zealand, Germany failed to seize 45,000 BTC held by some scammer. U.S. healthcare says Charles Hoskinson, fucked. Pitches an AI blockchain solution. Funny from the guy who knows nothing about AI with the blockchain that no one uses. Weird. U.S. marks down payroll gains by 911,000. Perpetual style crypto futures coming to the U.S. Graduate level Bitcoin class. Nothing. I see nothing. Like I kept looking, and I feel like if it was a bigger deal, it would be everywhere. So yeah, I don't know that it's that big of a deal. I don't know. Let's see. I heard it's unsafe to transact on a hot wallet. Yeah, from that one article, that one single article. The problem is no one else is covering it. Don't you think that's weird? I mean, be careful. Obviously, you don't want to give your stuff away to people, but I don't see anything. I just keep looking. Let's see. Nothing. Uh-oh. Oh, James Wynn. Oh, I got to change the music. Dang it. Apparently, James Wynn does not have a win today. Hold on, let's see. Let me get some, yeah. Wales oust. This guy's so bad. Listen, if you ever think you've had a bad day trading, I had a bad day yesterday. What is a scam notification? What do you mean? Like something notifying you of a scam? Yeah, they have all sorts of articles that will notify you when scams are floating around. And I only saw one article on this. One. And I just feel like if it was a big deal, there'd be more than one article about it and 7 about Pepe. So I don't know. But maybe for a few days, don't do anything. You shouldn't be doing a lot of anything anyway. But yeah. Wales oust James Wynn. Was it a scam notification? You mean, was it a notification of a scam, or was the notification itself a fraud? I don't know. You're going to have to position your question better. Okay. Maybe you put like quotes, like a scam, like scam is like a scam. Because it could have been scam notification would be a notification that there are scams aplenty. There's scams abound. There's scams around us. You've been notified, like an Amber Alert. An Amber has been taken. Scam notification. There's a scam going on. Or was it a malicious notification? Wales oust James Wynn. Remember our buddy who somehow keeps coming back with all this money, and you're like, where does he keep getting money? He's bankrupt over and over. Anyway, Wales have ousted James Wynn as Hyperliquid's biggest loser after a $40 million blow-up. Whale OXA 523 has racked up over $40 million in losses on Hyperliquid so now there's a bigger loser than James, although James lost $100 million. I think James lost $100 million. Whale OXA 523 racked up $40 million in losses on Hyperliquid, overtaking James Wynn to become the platform's biggest loser. Oh, boy. That's not really an accolade. Oh, let me turn my alarm off. I've got this detection thing. And my buddy's doing some drywall stuff. Okay, let me go here. Devices. Monitoring. This one. Okay. Okay. Hush. All right. Hyper trader OXA 523 is overtaking James Wynn to become the platform's biggest losing whale. The largest whale loser. Anyway, racking up over 40 million in losses in under 1 month. Wow. Congrats. According to on-chain data. In a Tuesday post on X, Look on Chain revealed that the trader's downfall was driven by a string of high leverage missteps, including a $39.66 million loss on Hyperliquid, where he sold 886,000 tokens before the asset rebounded. He then, had he held the position, it would now be worth nearly $9 million more, but he did not. He later lost $35 million on a long Ethereum position, which he then flipped to a short. And then once he flipped to a short, he lost another 614,000. His current Bitcoin short is underwater, showing an unrealized loss of $1.8 million. Sheesh, this guy can't win for losing. Hyperdash shows the wallet is running a $152 million position with 28.69x leverage and has a combined monthly loss of $39.5 million bucks. Margin usage stands at 114% with full exposure to short positions. And James Nguyen, the guy who's already been out of money and somehow keeps getting money to be out of more money. Something's not making sense about James Nguyen. Like, I think James Nguyen is like a sponsored trader. They just give him money because he knows he's going to lose it or something, or maybe it's marketing. But James Nguyen, I don't think is a real trader. Something's suspicious about all this. Let's see. The previous title holder posted a $23.6 million loss last month. But see, I thought he was down $100 million the month before that. In July, James Nguyen disappeared from social media, briefly deactivating his X account after updating his bio to simply read broke. He returned days later with two high-risk positions, including a 40x leverage Bitcoin long worth $19.5 million and a 10x Pepe long valued over $100,000. Nguyen first drew attention in May when his $100 million leveraged Bitcoin position was liquidated, followed by another $25 million loss on June 5th. He later claimed that large players had deliberately targeted his liquidation levels. Right. And then we have Andrew Tate, who's lost a little bit on Hyperliquid. Tate's Hyperliquid losses, by the way, Tate's going to probably end up in prison for the rest of his life. You guys know that him and his brother are like, have been indicted for like a series of like human smuggling and all this kind of stuff, which is, it's weird because Andrew Tate is kind of toxically masculine, but he's not stupid. And you think like, why would you get into that? You know, if you hear him talk, he's not an idiot. He's a sharp guy. Like he's intelligent. He's probably not a super nice guy to hang out with, but he's intelligent. And then you think, why would him and his brother get caught up in all this bullshit? But those guys are probably going to prison forever. Yeah, it's some of it's fabricated, but not the stuff in like these little third world countries, like where they were moving chicks through. I don't think that's fabricated. Like I think these guys were. I mean, it's not like it's beyond reason that Tate would pull some shenanigans, right? The guy has a bit of a god complex. Anyway, his Hyperliquid losses reached 726,000. Whale and Nguyen aren't the only ones bleeding on Hyperliquid. Last week, Andrew Tate, the former kickboxing champion and controversial influencer, opened a long position on the Trump token. Oh no, what a dick. He entered a long position on Wilfy, which was liquidated for a loss of, that's not terrible, 67,000. That's not horrible. I mean, it's not the end of the world. The liquidation occurred less than 2 weeks after he opened a 3x leverage short on the Kanye West Yeezy token, which also went south. Tate's cumulative losses stand at over 726,000 on Hyperliquid. God. Whenever you guys think you're having a bad day, it's not as bad as Andrew Tate, fake James Nguyen, or whoever this whale is. Because they losing more. They losing more. And I know that's Schadenfreude, however you pronounce it. And I know it's not good to be happy about someone else's losses. But sometimes in order to put life in perspective, it's okay to realize when you make a bad choice. Like I'll tell you what I did yesterday. It was stupid. It was an options trade. I I had an order to sell. I mean, I didn't lose money. I lost potential that I would have gotten if I hadn't fiddled with my order. My gut instinct said I could sell the 35 calls for this week for 35 cents. 35s for 35s. I put 0.35, left it in there. When the price of Ethereum bumped up, I bumped up my order. I should have just left it alone. It would have filled. I bumped it up to 40 cents. The ask got to 40 cents. The bid never got far enough. Never happened. Never happened. So I ended up selling at 21 cents. That cost me 14 cents. I chased that son of a bitch all the way down. That cost me 14 cents on a lot. It cost me 14 cents on a lot of contracts. So that was probably $10,000 of stupid. That was $10,000 mistake. Yeah. Idiot what idiot. Let's see right now. Oh, Ethereum's it kind of gave back all this job loss revision thing. The market gave back a lot of gains. Although that's weird. Doesn't matter. We'll talk about it later. Okay. So now let's get to old gentleman sailor. Let's get to the sailor. I found an article. It was pretty interesting. And the thesis is MicroStrategy technically bankrupt? Now, we know that he is morally corrupt. Well, and he is corrupt. And he's running the biggest Ponzi scheme in history. Yes. And his company was already he's been indicted for fraud personally. He and his company were indicted for fraud a few years back, whatever. So he has somehow manufactured some success, but he is corrupt. And he's been corrupt, and he's been making this long, gambly, bullshitty play to borrow money from people and buy them Bitcoin. Well, and buy himself Bitcoin on their behalf that they don't own at $2 for every $1 worth of Bitcoin. DAT, or the digital asset treasury, which is a new word. I guess it's entered the crypto lexicon, right? DATs. You're running a DAT, a digital asset treasury. I guess we're all running DATs. As new category, this gained size with the current poster boy of MicroSailor. So numerous others. It's mostly third-rate companies, right? So what a third-rate company does is, if your company is garbage and you're on the border of bankruptcy or insolvency, you just tell everyone you're going to become a digital asset treasury. You're no longer going to really do anything. It doesn't matter if you sold pizza or fine wine or chairs or market intelligence. You give up on your business and you just raise more money from a bunch of fucking fools. And those guys give you money to buy yourself crypto. And they don't get any of it because they're not usually senior debt, but you get it because you get whatever you want because you're now a digital asset treasury. So great. So there are two types of digital asset treasuries that you need to distinguish: the necessary, which is the part of the operating business DATs, right? Stuff that miners might do, or like crypto exchanges, somebody in the crypto business that would have a function for a treasury. So like if you have a big mining company, you're producing a lot of Bitcoin or some other assets, then you're going to have a treasury. That makes sense, right? An exchange is going to have certain treasury functions, right? Certain hedge funds or pension funds or endowments might have created a digital asset treasury as part of their total investment landscape. Okay, cool. That's one kind. And then there are loophole DATs. Scammy, Ponzi, loophole DATs, like MicroStrategy. MicroStrategy is a product of the SEC fundamentally, as it got around to the requirement for MicroStrategy, their greatest scam was They circumvented the rules for having an ETF. They're like, well, we can't become an ETF. There's no crypto ETF, so there's no Bitcoin ETFs yet. So we'll just buy a bunch of Bitcoin and people can buy our stock. There you go. There's your ETF. So Microsoft is a product of the SEC fundamentally, as it got around the requirement for the for the ETF approvals, right? Though it did discover new things on the way, which, they found a bunch of other ways to monetize these assets, like a bunch of different ways to skin it and to kind of create weird derivatively exposed stocks and bond type products, like a roundabout Bitcoin bond of sorts, right? Where you earn interest by owning the asset, but whatever. But the bond part is pretty much dead at this point based on their August earnings. So they've issued no bonds at all for about a year or so. Instead, they've created new stocks, but with a significant catch, as that they're offering a 10% dividend, which is to attract demand, obviously, and get people to. So you get paid a dividend. Okay, cool. But you're only getting, you're spending $1 and you're getting 50 cents worth of Bitcoin. Oh, by the way, that as an investor in these various stocks that they have, the various equities, you don't get any of that. If they get liquidated, you get none. You get nothing. It's only the senior note holders. It's the only people that hold paper against them. That's it. They're the only ones that get paid back. So they have $8.16 billion in bond debts that are due from 2028 to 2032, though investors can elect earlier payments starting from 2027. That's only a year and change away. And, we don't know when is the next bear market or the next, but, this writer kind of assumes that might be in the next bear market. I don't think crypto gets bear markets the same way it did in the past. So I think this part of it maybe, we're all speculating, so whatever. But if they got put to the test and their liabilities continue to increase, it's gonna be a rough time for Strategy. First of all, the non-Bitcoin business, which is the, some intelligence software and the lending out of corporate aircraft, of which apparently they have a plane. And I guess they're buying a new one. It's either not making much or it's operating at a loss. So that's basically a loss leader, or no, just a losser. It's a loss loser. But they have some cash on hand, not much, like $34 million, which is like, for a whole company, it's nothing. They need to pay $18.5 million in interest a year, or 20 basis points. And they need to find the capital to pay the principal as well. So $8.1 billion as of August. Okay, that's where they're at. Or sorry, $8.16 billion as of August. That's where they're at right now. But $18.5 million a year in interest. They also need to pay $80 million a quarter, right? Which is $360 million a year to pay stock dividends, which their profits or cash on hand cannot cover. They do not have the cash. So unless they sell more shares of something to get the cash to pay these guys back. You see why this looks like a Ponzi scheme? In any other time period, this fucking dude would be in prison. Oh wait, they tried to twice already. Weird. Let's see. 28 million shares of STRC stock were issued on July 29th, 2025, resulting in 21 million in dividends payable each monthly period on the STRC stock, assuming that the total dividend rate of 9% remains unchanged. All in all, about 600 million a year, or $60 million a month, which is a small amount. That's pretty small compared to their $70 billion worth of Bitcoin. But the idea was, they said they're not selling Bitcoin. They're not going to use Bitcoin to pay off these debts. So they're going backwards. This is why you get these numbers, like many billions a quarter, that these guys are hemorrhaging. And they're also none of this Bitcoin's been put to work. They're not lending it. They're not creating a yield on it. They're not which would add, third-party risk, but they're not lending it or monetizing it in any way. They're not using it to back some other currency. So, the bull market, whatever we're in, it's still in. They've done nothing with it. Strategy has done nothing with their Bitcoin. You should assume that they will do nothing with their Bitcoin. And, if the market tightened up, those opportunities would be even more diminished. And that might be the time when they might be stuck having to sell some Bitcoin. And that's where the chaos happens. When they sell one Bitcoin, that thing collapses to fucking zero, because everyone knows, oh shit, here's what's about to happen. And this is a quote from them, which I thought was a little interesting. It is worth paying attention to. Our short-term liquidity needs include working capital requirements, anticipated capital expenditure, dividend obligations on our STRK stock, to the extent that we do not pay such dividends from or in the form of shares of our Class A common stock, dividend obligations, which we still owe on our STRF stock and STRC stock, regular dividends on our STRD stock, and contractual obligations due within the next 12 months. We expect, this is continuing strategy, we expect that our cash and cash equivalents as of June 30th, 2025, together with cash and cash equivalents generated by our operations, will not be sufficient to satisfy these needs over the next 12 months. I'm going to read this again, because this is an important, matter of fact, I'm going to copy and paste this sentence. This is all you need to know. For all of you that have thought that strategy was a bit sketch, and you were like, I just don't know how to put it in the right words. You don't need to, because they've done it for us. It is right here. Let me write. Strategy statement. See, it's not a strategy statement though. It's a statement from strategy. Here. Let me go. Let me just put MSTR, because it's, yeah. Boop. Here. Strategy statement. It's good stuff. You can't make it up, especially when they're the ones making it up. We expect that our cash and cash equivalents as of June 30th, 2025, remember that just happened, together with cash and cash equivalents generated by our operations, they don't make any money, will not be sufficient to satisfy these needs over the next 12 months. However, we anticipate being able to use proceeds from equity or debt financing to meet these needs. Wait, so you're just going to go sell more stock and dilute us? Yes. Oh, cool. I was wondering if I was going to get diluted. Now I know that I am. Yeah. I was worried that maybe I wasn't, but now that you're reassuring me that I will be diluted, okay, this is good. This is good stuff. Although we do not anticipate needing to use our Bitcoin to meet our short-term liquidation needs to the extent necessary, we would seek to use proceeds from the sale of our Bitcoin to meet such needs. Are you listening to the words coming out of Michael Saylor's mouth? They are telling you, we run a Ponzi scheme. If you buy our stock, not only do you not own any Bitcoin, but you're getting fucking diluted because we can't pay our bills. Oh, and by the way, the Bitcoin that you don't own, that you're paying $2 for every dollar's worth of Bitcoin that you don't own because you own equity and you're the last in line at liquidation, we're going to sell that Bitcoin that you don't ever get and that you don't own to meet our needs. Like, insane, right? This is them. This is their statement. So you go, weird. They say roughly the same thing for long-term liquidity, with the company making it clear that right now they're paying their debt with new debt. Because our income is not sufficient, which is often the path to bankruptcy or prison. So it's either one or the other for these guys. This cannot work into perpetuity. It cannot. It is not possible. Now, they could lower their dividend rate, but they need to issue new stock to pay those dividends to begin with. And if demand fails when you lower the rate, then lowering the rate is going to make it harder to sell stock to pay the rate. So remember, they have to sell stock now to pay for. It's just like the government. Only they don't have a bond market to sell into. They don't have the treasury market to sell into. The treasury does. See, these guys forgot that becoming a digital asset treasury doesn't mean becoming the U.S. treasury. Okay? So if people don't want the paper that you're issuing, sailor, you're broken. Your shit is broken. So yeah, that they could lower the dividend rate, but it would make it less attractive. And since they need the money to pay the dividend in the first place, they'd be jammed up. They could pay the dividend in stock, which is a default of sorts, and therefore sooner or later they'd have to tap into the Bitcoin, because if they stock the dividend, then they can't use stock anymore to satisfy their short-term and long-term liquidity needs, including a new airplane, right? So the scale is small as of August. It's just $60 million a month and potentially 2.6 billion for the 2028 convertible note, which could become due as soon as 2027. Yet, the same way that compounding interest makes us rich, compounding debt interest and debt service is likely to break these guys. Everything is against them. Time, history, math. It's all working against them. And so if they start tapping into their Bitcoin, not only would MicroStrategy not be buying, right, that kind of passive indexation effect, but they would be selling. So that would be a pretty big pivot. And they bought $10 billion of Bitcoin in the first 6 months of the year, 217 million just in the past week. But it's anyone's guess what that does to the price if it's taken out. So let's say to the extreme, 20% or 100K for Bitcoin's non-micro price, right? So let's say Bitcoin drops down a little bit. These guys are going to get whacked. The market would, because if you see them starting to get taken out, what will happen is the hyenas will circle. They can sense a wounded gazelle. So the hyenas will circle, and the market would then want to front run this monthly expense, let's say 10%, right? So 8 billion in debt capital. And they pay it off and say another 10 to 20%, that makes it for a Bitcoin price of like 60K. So, and basically what this guy's doing, he's going through all the extreme cases of how an unwind would occur. So at the extreme of like $30,000 Bitcoin, MicroStrategy could almost survive, but they're not technically bankrupt holistically, but they're not far from it, right? They're pretty much bankrupt. So because they keep adding more to their liabilities, and also we're not assuming that people would just stop buying their stock or that people would dump their stock. So, and you think, well, if everybody dumped their stock and they did some buybacks, maybe they do buybacks so that they're buying down the debt service, right? Like kind of paying off their credit cards because of all these 10% paying piece of shit equities that he launched. But they'd be adding more to their liabilities. So I don't know. It seems like they're going to owe about $1 billion a month. And the big question is, if Bitcoin at the extreme were to sell off, I don't personally think we get a $30,000 or even a $50,000 Bitcoin. But if you push what Saylor's doing out in the future, the number for their guaranteed bankruptcy keeps going higher and higher, because their debt service will continue to accumulate in that same compounding interest snowball effect. That's no bueno. So, they can probably their underlying business is bankrupt. Okay, underlying business bankrupt. See you later, bye. But they have a lot of assets, and they probably could pay back their bond holders and their senior debt holders and all that kind of stuff. The people that own the equity, they all get wiped. But that's what you get if you own equity. So it's their Bitcoin. I guess the main point of this is it doesn't matter that they're bankrupt. It doesn't matter what they're doing. It's their Bitcoin. Theirs, his and his, whoever are the bond holders. It's their Bitcoin. If you own shares in these assets, it's not your Bitcoin. And don't be a fool and think it is. So, I don't know. I think that these different weird stock things, they'll start to collapse if he lowers the dividend. So as long as he doesn't lower the dividend, I think people will still be stupid and just go all in, even though you could just buy IBIT, right? Like it's even easier. Yeah, it's weird. So yeah, is MicroStrategy bankrupt? Probably. Well, strategy. But can they run this gambit for a long time? Yes. Why? Why? Because the people that are giving them money don't own anything. They own nothing. He and his cronies own a bunch of Bitcoin. You own nothing. Maybe that's what they meant. They said, you will own nothing and like it. Remember they said that, the World Bank guys, you will own nothing and like it. Yeah. If you invest in MicroStrategy, you will own nothing. You may not like it, but you ain't going to have no other choice. Anyway, it is what it is. Okay. We will see you tomorrow. Brandon will be back. You want to know what's weird? I went and got, I had a toothache, but I couldn't figure out which tooth. It was just a general area. And I went in and they did some testing and x-rays, and they're like, buddy, we can't see anything. I'm like, something's there. It's achy. Like, when? I'm like, sometimes. Is it all the time? I'm like, no. Can you identify the exact area? I'm like, nah, just this side. Anyway, he said, okay, well, come back when it hurts again. Ah, dang it. I mean, I guess that's better than there being stuff. Anyway. So on that fine note, stay in school. Don't do drugs. Don't do anything my poor insolvent drunk strung on meth grandmother or Brandon wouldn't do, which is very little. And we will see you guys tomorrow. We'll be back at it.